Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Sales International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of these patterns, levels, analysis or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, LME 3-month copper. Back in January this year, I compiled and published my annual video commentary of LME 3-month copper. Please look at the YouTube index to see if you haven't already. In this video, I looked back and found a very relevant technical pattern for the action seen since mid-December last year. That key piece of evidence, which is recreated here on this daily chart, is the bright red 2009 to 2016 bullish shift pitch hook. And the specific key piece, buried amongst some other colourful ones, is the bright red upper tine, currently at 13,480, that slashes across the middle of my daily chart. Excuse me. This bright red upper tine had previously mainly capped prices until early May this year. It was a key piece of overhead resistance, but it was breached and broken most recently in July with force. This caused me to start looking 10 weeks ago for the next pattern, and it came down to these possibilities. The first one is a major and still working pattern, the purple November 25 to March 26 bullish shift pitch hook, with prices in between the overhead purple middle tine, currently at 14,746, and a purple lower tine below, currently at 13,087. The second possibility was the late December 25 to early May 26 reverse head and shoulders pattern, a pattern usually considered bullish, though there is a bearish continuation variety. I've stated openly for many weeks that I have not been happy about this pattern, but I did say on this pattern, I quote, lay out what I consider potentials right now, not targets yet, but potentials for the move higher. Thus, a primary potential be up in the 14,747 area, thus above the high of the market, and a secondary hard reach potential be up in the 15,271 area, close to the top of my daily chart. I have doubts about this pattern. I think it's the weakest by a country mile of the ideas mentioned. End of quote. This idea is still out there for now, but I choose not to develop this any further, as other more effective and interesting patterns have subsequently appeared. Since that time, a third and newer pattern has developed. It is split into two ideas. The first is a dark blue early May, late June descending triangle pattern, which the market exited properly on the upside 4 weeks ago, or it can be a longer term end of January to late May possible descending triangle, utilizing the same base, but with a higher bright pink downtrend, currently at 13,867. I'm still not wholly convinced on this latter pattern, but I will continue to mention it because 3 weeks ago we broke up through the bright pink downtrend. On these two ideas, I had 5 weeks ago laid out topside targets for the dark blue descending triangle and a primary target X3 at 14,210 and a secondary harder to reach target X4 at 14,515. The primary target at X3 at 14,210 was reached late 3 weeks ago, and we have come close to target X4. For that second idea of the larger 2026 base descending triangle with a bright pink upper downtrend, I laid out 2 weeks ago a primary target X5 at 14,220, a target already reached, and a secondary harder to reach target X6 up at 14,570, just above the top of the market, and one that is not too far away. I'd now like to draw your attention to a pattern I drew 2 weeks ago, a late March to early May bright green bullish shift pitch hook, with the market in between the bright green middle tine above, currently at 14,773, and the bright green lower tine below, currently at 13,872. This bright green bullish shift pitch hook is showing excellent promise as a bull channel between the lower and middle tines. I also said 2 weeks ago, and I quote, excuse me, The bright green middle tine crosses the purple middle tine on about the 19th of August, give or take a day. Though they are not related pitchforks, I would still watch out for some volatility around then. End of quote. Well, this turned out to be quite prescient, as this was the significant low seen last week. This all still brings me to the same point I made 7 weeks ago when I said, and I quote, all this leads me to suspect that with all these patterns, we're coming to some sort of a cusp, maybe in the next month or so. So watch out, as we could have an explosive rendition after the possible cusp. End of quote. This continues to be unsettling and interesting all at the same time. LME 3-month aluminium. The market here edged out, then below, then above, and now back below, though still in close proximity to what originally was a bright green April/May 2025 to date bull channel that morphed over time into an April/May to date very large, bright green, rising expanding wedge pattern, currently 32.84 to 39.02. However, the edging out also resulted in breaches. Extensive breaches, I grant you, but just breaches, not breaks, away from this very large, rising, expanding wedge pattern. The market, as I've already mentioned, not really letting go of the bright green lower trend line. The drop down in early June through to early July stabilized at the 50% Fibonacci line of the March to September 2022 move at 30.76, and from which we saw a slow rise, almost a bull channel, between below the newly drawn dark blue lower tine, currently at 31.82, of the big April 2015 to July 26 bullish Andrews pitchfork, a pitchfork which is showing the bullish incentive of this market, and a recently drawn bright red upper trend line breached but seemingly repaired, currently at 33.09. Interestingly, prices over the last 2 and a bit weeks have followed down the green short medium moving average, currently at 32.27, and look like they may challenge the dark blue lower time when the green short medium moving average gets down there, which may be as soon as later this week. If that is the case, then the whole start of June to date action could possibly be seen as a quite large bearish halfway hesitation, but it's too soon to say just yet. However, before that, I need to discuss and deal with some targets I'd left on the daily chart from the break upwards in early August of the recent bull channel. 2 weeks ago, after the break up out of this bull channel, I laid out a primary target X at 34.21, just above the mauve medium moving average, currently at 33.90, which is the next resistance above the congestion at 33.80, and a secondary hard to reach target X1 up at 34.58, which is a little further above the mauve medium moving average. These targets are still live, but I am considering, if we do see the market follow the green short medium moving average lower, I'm considering retiring these two. Finally, I would like once again to point out a major long-term pattern here with the purple middle tine further above, currently at 35.05. The very large November 2015 to April 2020 bullish Andrews pitchfork. This large if shallow bullish pattern is still in operation, as the upper tine is right now still up off the top of my daily chart. The purple lower tine, currently at 26.82, is down towards the lower end of my daily chart. This is a pattern to pay attention to on a longer term basis. LME 3-month lead. The market's recent big moves lower has led to 4 patterns forming. The first was the monthly key reversal down for June, with some follow through lower throughout July, but it became more of a stabilizing market in July than a bearish one. The second pattern was the early May to late June head and shoulders top, with a bright red neckline, currently at 18.80. 9 weeks ago I said about this pattern, and I quote, "We're in the final stages of completing this pattern, so I cannot give targets below," assuming of course it is a head and shoulders top, "but I can give an idea of the size of the move should it happen in between my commentaries. Hence, for a confirmed break below the bright red neckline, we would have a primary move of about minus $50 under the neckline break, and a secondary hard to achieve move of minus $97 under the neckline break." End of quote. Well, we had a break lower below the neckline 8 weeks ago, and I did 7 weeks ago, and I quote, "Since then we have had a break lower, and hence it gave a primary target at 18.81, a target we reached today, and a secondary hard to reach target X1 down at 34. End of quote. In mid-July, we moved down relatively close to target X1 before backing up again. Been watching to see what will happen next, whether we head back down or break back higher, especially back over the bright red neckline. The last 2 weeks have been breaching higher, and this week we are over it completely so far. If this stays like this for the rest of this week, then I will likely retire target X1 by the next commentary. Indeed, I said 2 weeks ago, and I quote, "We seem today to be remaining within a wide stabilization band in approximately 1850 up to about 1900, maybe 1920. End of quote. Well, this seems to be the case today. Now, there is another pattern, one I drew 6 weeks ago, which of a dark blue January to June bearish Andrews pitchfork, which I still hope might show some insight into any bearish angle of attack here. Right now, we're moving up through the 2021 low at 1908 and towards the January 2025 low at 1916. Whilst at the same time, the dark blue upper tine is coming down to meet the market. Over late June and early July, prices bounced up off the declining dark blue middle time below, currently at 1788, twice, showing support, if a declining support, each day. It will be interesting to see if the dark blue upper time will also act on this market, but in a more bearish fashion. So watch out. I am, of course, happy in a heartbeat to finesse this into a shallower bearish shift pitchfork if the market demands it. Now, this recent stabilization over July has now morphed into a possible reverse head and shoulders pattern. We haven't completed the pattern as yet, so I'm not able to give targets, but we so far have approached, even lightly breached the bright green neckline, currently at 1924, but not as yet truly pushed through it. But it is one to watch, especially so close to crossing through the dark blue upper time. Then there is the green declining short medium move average, currently at 1901. This had been a cap on the market 2 weeks ago, but we are today above it and seemingly using it as a base for some possible attempt higher. This brings me to my final point. It's a point I've been making here since the start of 2025, and I'll continue to do so going forward. At the end of December 2024, we saw the market had created a very large and rare annual key reversal down in LME 3-month lead. Since then, well, we haven't really done that much, especially compared to some of the other metals. Indeed, prices are only about, where are we, $50 odd or so lower today than they were at the end of 2024. That's not an endorsement of the annual key reversal down, but neither is it a repudiation of it. Hence, I still say, even now with prices where they are, that one should still look at all things going forward in this year and beyond, here in this metal, in the shadow of this longer term bearish pattern. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.